PantheonAI presents PantheonAI Podcast, April 23rd. Welcome to the PAI Morning Briefing.
And good morning, everyone. I'm here with my co-host from PantheonAI.
That's right. And today is April 23rd, 2025. Hope you're all settling in with your favorite morning beverage, whether it's coffee, tea, or maybe one of those increasingly popular craft mocktails.
Oh yeah, the mocktails are definitely having a moment. We've got quite a lineup today, too, from market movements to some really intriguing headlines affecting pretty much every corner of the financial world.
Absolutely. Let's kick things off with a quick market overview. The major indexes seem to have started the day on a positive note, which is nice to see.
Yeah, definitely. The S&P 500, for instance, is trading right around 5435.26 cents. That's up by about 0.73%. A healthy little tick upward, right?
It is. Offers a little glimpse of optimism in the current environment. Over in the Dow Jones, we're seeing it hover near 400.8390 cents, enjoying an increase of about 0.675%.
So maybe not super flashy gains, but that steady performance from the Dow really does reaffirm the strength of those blue chip companies it holds.
Good point. Switching over to the Nasdaq, that tech-centric index is sitting at roughly $16,927.23, with a more modest increase of 0.28%.
It's interesting how even in times of volatility, the tech sector just seems to hold its own, even if the gains are sometimes subtle, you know?
Totally, and let's not forget the Russell 2000. Often overshadowed, but it's seeing a price of roughly $1,947.78, with an increase of around 0.488%.
So, small caps getting a little love too. Now for our digital currency enthusiasts, let's talk crypto.
Ah, yes, the crypto scene. Bitcoin, the big one, is currently trading around 9266567 cents. But it's not all upward momentum today. It actually saw a slight slip, down nearly 0.856% recently.
Right, but despite that little dip, what's really catching the eye is that Bitcoin is actually on a asterisk 3-day upward trajectory. That puts it on course towards that psychologically significant $95,000 mark.
That's the exciting part. And Ethereum isn't far behind in showing resilience. It's traded at roughly $1,781.147, enjoying a healthy upward movement of about 1.380%.
For crypto traders, these movements really highlight that volatile but potentially opportunistic nature of the market. Could definitely inspire some excitement for potential breakout trades.
Great. Moving beyond this quick overview, let's really dig into some major market trends shaping investor sentiment right now.
Yeah, one of the most significant themes we're seeing is the interplay between global trade tensions and inflationary pressures. There's growing concern that ongoing trade wars aren't just feeding inflation, but also slowing down economic growth.
Absolutely. Recently, an analysis by S&P revealed that business confidence has taken a steep dive, hitting levels we last saw during the turbulent days of the pandemic.
Wow. Back to pandemic levels? That's not great. If you're picturing a roller coaster that's both exhilarating and stomach-churning, you're probably not far off from how many investors feel these days.
It really feels like every time a trade friction or a tariff dispute is announced, it just stirs up enough anxiety to make even the most seasoned investor break into a slight sweat.
Totally, and closely related to these trade tensions is a big story out of the aerospace sector, particularly a recent announcement from Boeing.
Oh yeah, I saw this. The chairman and CEO, Kelly Ortberg, brought forward some concerning news. It appears China, which is a key market for so many international firms, has halted the intake of Boeing's aircraft.
That's not just a minor hiccup. The 737 MAX planes scheduled for delivery in China are actually being rerouted back to the United States.
Think about that for a second. For an industry as competitive as aerospace, and for Boeing specifically, losing access to such an important market could have some significant longer-term implications.
It's kind of like baking a cake, and then someone snatches away the key ingredient at the last minute, right? The final product just isn't going to turn out as planned.
That's a great analogy. And while we're on the topic of trade disputes and their ripple effects, let's talk about GE Vernova.
Right, they just reported quarterly profits that more than doubled market expectations, which sounds fantastic on the surface.
It does. But they also flagged a potential tariff cost of up to $400 million. That's a substantial hit, isn't it?
Huge. And it really hints at the broader challenges facing industries that bridge both traditional energy and the rapidly growing renewable energy sector. It's a classic case of hitting the jackpot on one hand and then finding an unexpected, expensive bill waiting around the corner on the other.
It really reminds us that even strong performance can sometimes come with a bittersweet aftertaste when external factors, like tariffs, are at play.
Absolutely. Now, let's swing back to the vibrant world of cryptocurrency news for a moment.
Okay. The story making headlines this morning, repeated everywhere because it's hard to miss, is that Bitcoin continues its impressive rally. Rising for a third consecutive day, that really stands in stark contrast to its generally volatile nature.
It does. And part of this rally might be attributed to some recent policy shifts. Former President Trump, known for his declarative style, has apparently softened his stance on China tariffs.
Interesting. And that, coupled with comments from Federal Reserve Chair Jerome Powell, seems to have infused the market with a sense of relief.
Right. While these policy shifts are certainly welcomed by the market, they do raise some interesting questions. Could we see a more sustained bullish trend in crypto if regulatory stances continue to align more with market-friendly policies?
That's the big question, isn't it? And more importantly, how should traditional investors best position themselves to take advantage of this moment?
Exactly. As we weave these stories together, it's crucial to also consider the broader implications for various sectors. Let's start with tech.
Tech, always the nimble, forward-thinking field, seems to remain a beacon of resiliency in uncertain times. Even though the Nasdaq's gain today is modest, many underlying tech companies are investing heavily in innovation and long-term growth.
There's definitely growing chatter among sector experts that advancements in AI, cybersecurity, and cloud computing could really fuel significant expansion in the coming years.
It almost feels like every day there's a new breakthrough that redefines digital landscapes, reminding us that in the world of tech, unpredictability is almost part of the job description.
So true. Shifting to the energy sector, GE Vernova's performance offers a glimpse into the evolving dynamics there. It's an industry caught between the old and the new.
Right. On one side, traditional energy companies still rely on fossil fuels, facing increasing pressure from environmental policies and shifting public sentiment. On the other, there's rapidly growing interest and investment in renewables.
GE Vernova's robust profit, even with the tariff caution, really underscores this transitional phase. Companies are trying to balance traditional revenue streams with emerging opportunities in renewables.
Investors really need to keep an eye on which players in the energy sector can navigate this delicate balancing act most effectively. It's like watching a high-stakes chess match.
Yeah, totally. Turning to the finance sector now, maybe one of the most impacted by global economic uncertainties, trade war fears, and fluctuating consumer sentiment.
Definitely. Those inflationary pressures, spurred partly by persistent trade wars, are really weighing on business confidence. Financial institutions have to adjust their forecasts and revise risk assessments to account for these headwinds.
It's a big reminder that no matter how strong sectors might look on paper, there are often invisible forces at play behind the scenes. And lately, many analysts are noting that all of this feels very reminiscent of the challenges we faced during the pandemic, a time when uncertainty really reigned supreme.
It does feel that way. I heard someone joke that the only thing falling faster than business confidence these days is a smartphone off a distracted commuter's hand. And while it's a jest, the underlying sentiment is very real.
That's a good one. Okay, let's shift gears again and discuss global market implications. With today's interconnected economies, news out of one region tends to send ripples around the world.
Right. U.S. market movements have a way of inspiring both hope and caution among European, Asian, and emerging market investors alike. A downturn in any one of these major indexes might prompt a global reassessment of risk,
leading to adjustments in portfolios, hedging strategies, even national policies. Take the ongoing trade wars. That's not just an American story. It's influencing decisions in manufacturing hubs across Asia, commodity markets in Europe, technology investment strategies in Silicon Valley.
It's a real domino effect. When Bitcoin and Ethereum are making headlines by flirting with new price highs, and policy discussions are rapidly altering market sentiment, we really are all in this interconnected dance together.
It's a great way to put it. So the big question for our thoughtful audience is, how are you adjusting your global investment strategies in the face of such sweeping, interlinked events? Are you doubling down on diversification or leaning into specialized plays you think can outperform despite global turbulence?
That's definitely a question worth pondering, maybe over another cup of your favorite morning drink.
Good idea. As we wrap up our discussion on market trends and global implications, let's quickly recap some of the most important stories making headlines today. There are about 10 major topics that have been repeated across various sources because they're just so relevant.
Okay, first up, that cryptocurrency rally. Bitcoin on the brink of hitting that $95,000 mark, fueled by internal sentiment and external policy relaxations. It's not just about the number, it's the momentum that could influence future regulations and institutional interest.
Seeing Bitcoin rise for a third day sends a strong signal. Some investors are even wondering if crypto is entering a more mature phase, maybe getting closer to the legitimacy of traditional asset classes. But can this positivity withstand the inevitable corrections?
That's the key. Next, the repeated theme of trade wars. Multiple reports confirming that ongoing disputes are really eroding business confidence. Pessimism among market participants is hitting those pandemic-era levels again.
It feels like more than just a temporary whimper. It reflects deeper concerns about supply chains, escalating costs, and overall economic slowdown. It's like the global economy is caught between a rock and a hard place, and solutions are easier said than done.
And trade wars are rarely short-lived. Their real impacts often take months, if not years, to crystallize. Then there's the story from Boeing.
Right, the aerospace giant in the spotlight after their CEO, Kelly Ortberg, announced China halting aircraft deliveries. It's not trivial, especially with those 737 MAX models earmarked for China now being flown back to the U.S.
It raises big questions about Boeing's international strategy and supply chain logistics. For aviation enthusiasts and investors, it underscores that delicate balance between international diplomacy, trade policy, and corporate strategy.
How does a company that large navigate these international trade waters without running aground? Still a big puzzle.
Definitely. Another compelling story comes from GE Vernova. Despite those stellar quarterly profits, they're bracing for potential tariff costs up to $400 million.
It's a story of triumph bundled with caution. Classic example of how external forces like tariffs can really tarnish impressive financial achievements. Investors are debating if it's temporary or a symptom of broader geopolitical stress on the energy sector.
It demands close attention, as it could set precedents for how similar instances are handled. We also touched on the regulatory front, where easing stances on tariffs, like those announced by former President Trump, seem to be helping lift the crypto markets.
Yeah, even as the Fed is careful with incremental adjustments, these regulatory signals help stabilize investor sentiment. Though, in finance, nothing's ever completely stable. Many wonder if these adjustments signal a more balanced regulatory approach benefiting both traditional finance and digital currencies.
Beyond these headlines, there's increasing chatter about rising inflation driven by trade wars, not just on corporate earnings, but on consumer sentiment too.
Businesses are concerned that while revenue might be growing, so are the underlying costs of production. With trade wars, input costs are going up, meaning companies have to juggle price hikes and consumer demand. It's a delicate balance.
Requires strategic finesse, maybe a bit of creative accounting, and sometimes, if you're lucky enough to be on the inside, even a well-timed joke at the shareholder meeting.
Haha, true. Even within traditional blue-chip sectors, market leaders are rethinking strategies. Financial institutions, for example, are increasingly wary of global economic uncertainty and pumping extra funds into risk management.
It's almost like watching a game of high-stakes poker, where everyone's trying to bluff their way through uncertainty. The industry's tightrope walk between optimism and caution is a storytelling goldmine for analysts like us.
A rich tapestry of risk, opportunity, and a dash of prudence. And let's not forget the human element in all this. These macroeconomic discussions can sound technical, but the decisions made by boards, institutions, governments, they have real-world impacts.
Absolutely. When business confidence dips, it's not just a statistic. It's about job security, community well-being, the price you pay at the grocery store. As investors and traders, it's our job to understand these undercurrents, read between the lines, and sometimes, laugh a little at the absurdity.
Well said. Shifting to sector analysis. Let's quickly break down how some specific industries are faring amidst all this drama.
The tech sector, as always, remains a bright spot. Despite modest Nasdaq gains, many startups and seasoned giants are pushing the envelope on innovation. We hear it consistently from insiders. The future is incredibly digital.
Experts predict further leaps in AI, machine learning, cybersecurity. And for anyone who's struggled with a computer that just won't cooperate, that's definitely a field to invest in. Figuring out complicated algorithms might be easier than troubleshooting that dreaded blue screen of death.
So true. Looking at energy, as we touched on with GE Vernova, there's that duality. Traditional sources facing pressure, renewables on the rise, buoyed by demand and regulatory support.
It's like a seesaw. Established giants on one end, upstarts and innovators fighting for that green pie on the other. Investors need to consider not just where the money's coming from, but where it's heading in this decade of transformation.
In financial services, as we highlighted, global uncertainties are prompting intensive strategy reviews. It's not just about interest rates or risk management, but forging new paths as digital banking and fintech reshape the landscape.
It feels like the traditional world of finance is in a race with modern technology. Motto is, adapt fast or get left behind. For those who enjoy a good race, this competition is thrilling.
Absolutely. And looking at global market implications again, it's clear that events in the U.S. are reverberating worldwide. European markets watching U.S. trade war dynamics and regulatory adjustments with a mix of interest and concern.
Asian markets, especially China and Japan, recalibrating strategies based on changing trade policies and consumer behaviors. Even emerging markets have reason to be optimistic or cautious as global tides shift.
For international investors, diversification really isn't just a buzzword. It might be the difference between a well-balanced portfolio and one vulnerable to single-region shocks.
Expert insights are crucial here. Many leading strategists are mixed in predictions. Some see continued bullish trends, especially in tech and renewables, while others warn of potential corrections due to inflation and trade wars.
One expert quipped recently, "The market is a bit like navigating the open seas. Sometimes you have calm waters, sometimes a storm, and every now and then, someone forgets to anchor properly."
Ha ha ha! That's humorous but poignant. Confidence is important, but caution remains key. So, for our listeners, some questions to consider. How do you think ongoing trade tensions will affect your portfolio long-term?
Are you leaning more towards innovative tech and renewable energy stocks, or finding opportunities in stable blue-chip companies? And with crypto, do you see Bitcoin's momentum as temporary or the start of a bigger trend?
These are questions every savvy investor should ask, not just in quiet reflection, but as part of an ongoing strategy with your financial advisors and, of course, our AI copilot here at PantheonAI.
That's right. Now, before we wrap up, let's bring together the essential takeaways. First, the market overall is showing modest but encouraging gains across the major indexes.
S&P 500, Dow, Nasdaq, Russell 2000 all positive today. But underlying concerns persist, especially with global trade tensions and the risk of inflation.
And in crypto, it's certainly exciting times. Bitcoin and Ethereum telling stories of volatility mixed with opportunity.
We also looked at major headlines. Trade war-induced inflation and the dip in business confidence, echoing the pandemic era. Boeing's challenges in China, GE Vernova's double-edged performance, tangible effects of geopolitical and trade challenges.
And how these trickle down to sector-specific impacts in tech, energy, and finance. It reminds us that investing is never one-size-fits-all, but a dynamic interplay of factors.
As we close today, just a few parting thoughts. Remember, in investing, like in life, every decision is a balance between risk and reward. Sometimes, the best insights come from understanding the underlying stories driving the numbers, not just watching the markets in isolation.
Whether you're intrigued by the digital revolution in crypto and tech or focused on global implications of trade tensions and inflation, the key is staying informed, remaining flexible, and never being afraid to ask questions.
It's been a pleasure sharing these insights. We hope you found them thought-provoking and useful as you navigate your investment journeys today and ahead. Thank you for tuning in to the PAI Morning Briefing.
We at PantheonAI are proud to be your information copilot, guiding you through the sometimes turbulent, yet always exciting, world of finance.
As you step into your trading day, consider this. How will you position your portfolio to take advantage of these evolving dynamics? Are you ready to embrace both the opportunities and the challenges?
And if you ever need clarity in the noise, remember you can always ask questions to our AI copilot, who's here to help make sense of it all.
With that, we encourage you to come back for the next episode tomorrow. Until then, keep inquiring, keep strategizing.
And remember, learning shouldn't feel like a full-time job. Have a great day, everyone, and happy investing.
PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.